This conference will now be recorded.
Good evening, ladies and gentlemen. This is Crusade Trading Frank. It's approximately 9:07 p.m. on January 31st, 2021. Welcome. This is our Sunday weekend strategic webinar where we try to use the few brain cells that we have left to forecast and predict what might happen going forward. The different volatility moves and all that stuff. We focus here, especially for new members should know that, purely on technicals. We talk a little bit about the fundamentals, the backdrop of what's happening with the markets and all that kind of good stuff. Then we look at a bunch of stocks, we answer a couple of questions from Q&A session from members, and then we wrap up and go watch our favorite shows on Netflix or Amazon Prime or Showtime, and then we go to bed and get ready for tomorrow. So that's what we do. On that note, full disclosure, this is purely for financial education, not for any solicitation or advice. These sessions are recorded, uploaded within 20 to 25 minutes directly on the real-time Twitter feed where all my content is delivered, as you all know. Click the link, listen to it, share the link with everybody so they can listen to some words of wisdom and stuff that a lot of people don't talk about. We look at the market in a very contrarian way, not always the way that the rest of the world's looking at. Doesn't really make us that special, but it does certainly makes us a little bit smarter in predicting what happens, especially in these very volatile markets. And then we go ahead and upload the session to YouTube, Crusade Trading YouTube channel, and that's done either tonight or by tomorrow morning. There we go. All right, welcome. So let's start off with a couple of quick comments on the market. As traders, as investors in stocks, traders in options and stocks, let's put it this way. This is one heck of a volatile market, but there is, and the volatility obviously has been enhanced tremendously, especially last week, primarily because of the GameStop, AMC, Best Buy, and all those heavily shorted stocks, which have basically taken a upper hand in dictating what the overall markets are doing. If you go through my Twitter feed, I put in quick explanations quick explanations on why these things happen, why forced margin sellouts happen. Just, GameStop, huge short position for some big hedge funds, which Melvin Capital was one of the biggest ones, down 50%. 50%. You're talking $8 billion almost. It's not a joke, all right? That's not a joke. So the bottom line is other parts of their portfolios, which are other stocks. Let's take a simple example like Apple, tremendous earnings, great stuff, but then falls. And that happened to a whole bunch of other stocks too. Even though we had green in a blood red market on Friday, some specific names, the overall market took a stumble because a lot of billions and billions of dollars worth of margin calls needed to be satisfied because those funds which were short needed to raise capital, i.e. use the big names, especially the large cap techs and other big names, as a source of funds, like an ATM machine. If they have, let's say, 500,000 shares of Apple, selling a bunch, selling 100,000 shares, loosens up free cash that they need to basically put together on their, to satisfy their margin calls. Generally happens on a Friday. That's the reason why on Thursday at 3 p.m. or 3:15 p.m. or something like that, I told people to buy the SPY puts, which went from roughly about $1.30. And at one point during the day, and these were the Feb 1st 370 puts, okay, expiring tomorrow, during the day went to almost $5, $4.86. That's more than a 300% plus return. Yes, majority of it I sold a little bit early, still about 140% return or so, and a little bit that was left managed to sell it slightly above 4. That's called hedging. It's not rocket science. So kind of figured looking at the thing that would happen, didn't expect the market to be down 700 plus points. I think at one point that's what it was. and ended, I'm talking about the broader market. Okay, it was a significant down day in the market, and we were selectively buying at the end of the day. And I believe we shall be nicely rewarded within the next 24 to 48 hours. And that's called a reflex bounce. We have done this many, many, many times. So let's stick to the charts. So the backdrop on the market last week was purely the short situation. I believe that's going to diminish a little bit because the short positions overall and the overall market, not just GameStop and that type of stuff, is starting to come down quite a bit. So if the short positions are coming down quite a bit, then obviously that's going to reduce a bit of the volatility. And money's going to basically go back and start buying the ones which were down 3, 4, 5, 6%, like the Apple, the Netflix, the Amazons, all those type of names. Okay, which for no reason were down, aside from the technical aspect of satisfying forced margin calls. Forced margin sellouts are a very powerful force in the market. You're not talking hundreds of thousands of dollars. You're talking billions of dollars. Okay? So just keep that in mind. If you've seen that happen before, fundamentally, there's nothing wrong with the markets. Fundamentally, as I'm talking, I'm just going to switch around the charts and we're going to go into it. Fundamentally, 84% or so, the number that I last saw, of companies that have reported overall, because this is earnings reporting season, right? Have beaten the estimates and given some pretty reasonably good guidance going forward, which is really what the markets are looking for. In other words, their growth prospects are better than what the so-called analysts thought, who were very bearish on what the earnings would be. So given that backdrop, you'd expect that these companies which beat earnings handily, would also go up, but that's not the way it works in the stock market. Okay, the market is a volatile beast, and it didn't go that way because of the situation happening with the monumental short squeeze, which I've explained in pretty explanatory terms in my previous webinar. So and of course there are hundreds and hundreds of articles now all over the place. All they can talk about is the GameStop and the slew of other shorted names which are going higher. So you guys can read up and sort of educate yourself a little bit more, and you need to know that. So that's basically it. All right. Now, saying all that, if you look at my Twitter feed on Friday, you will clearly see that I put out some terrific charts on entry points, on things which, again, what we call from a technical standpoint, deeply oversold over the short term for no fundamental basis aside from technical selling due to reasons we just spoke about. Okay. Shopify, Apple, showed a chart on GME just for the heck of it. Because the funny part about GME is GameStop, that not even the best of the best minds, forget us, okay, have any idea what it's going to really do. Eventually, the stock will settle lower. There's no question about it. But at what point it's going to happen, we don't know. But for active traders, you can play those cheap puts, okay? The cheap puts that I put out there, which are 30. Feb 5, which is next Friday's expiry, 30 strikes. $30 as if the stock's going to go to 30. It doesn't need to go to 30. It drops 20, 30, 40 points, which happens in 3 seconds. Those have an implied volatility or a range of roughly 30 to 40% during the day. So if you're fast enough, you can capture a good portion of those by playing those lottos, which are roughly anywhere between 90 cents and $1.50. Sometimes they double during the day. Okay, so sitting here trying to, just to give you an idea, the range on those GME Feb 5 30 puts was during the day was 73 cents and $2.50. That's a 200%, 200% if you just look at the numbers. Range. So if you capture even 40, 50% or 60% of that, if you're lucky 100% of that, you're a happy camper. So you don't need to sit there and overanalyze like, okay, when is this stock going to come down? Because it's not a technical stock at this point. Yes, I can show you the charts. We're going to look at that as if it's going to follow that. Okay? It's the waves of short squeeze and the waves of stoppages, halts that happen during the day. And then firms like Robinhood, said now you can only buy one share. So a lot of people, a lot of traders are migrating to TD Ameritrade and E-Trade and other platforms. Well, guess what? They're going to also restrict buying too. Okay, the system doesn't change, and they are restricting these buyings because otherwise, companies like Robinhood, where they allow you to buy fractional shares and all that stuff, they will go bankrupt because their clearinghouses have raised the margin requirement as to how much cash you need to have in order to maintain those positions in a big way. So they're forced to comply. They don't have a choice. That's the way life works. Okay, so bottom line is my Twitter feed showed the heavy duty movement on the VIX, where it would go, where it bounced down from. This was probably one of the best charts, if you understood what was going on here. The VIX hit exactly. And remember, these charts are drawn before the fact, not after the fact, right? Exactly. So you know what you can expect. It hit that, and then boom, big algo HFT, that's algorithmic high frequency trading cell programs, came in, and the market started to bounce a bit. So as that started to come down, remember the market, which is the SPY, for example, the spiders, that's the opposite of the VIX, right? Volatility index, that started to rise and created a candle. And then at the end of the day, this candle was a little bit red, because the final flush, at I think it was at like 3:50 p.m. or 3:45 p.m. or something like that. Okay, let's move on. So if you follow my Twitter feed and spend just a couple of minutes looking at the charts, the more you look at the charts, the more they're going to talk to you. It's as simple as that. You do your own charts, that's fine. I'm just doing my job on these precision charts, which have worked very well over a long period of time. So I put out Amazon, then the market charts like the Qs, mentioned the hedge funds forced margin sellouts, funding margin calls. It's also known as degrossing. Nice word, right? Degrossing, like gross. It's like degross. In other words, they're pulling down their positions. That's what they're doing. How we hit the 50-day moving average, actually slipped below that, and guess what? This uptrend line, which was from the lows in March, the COVID-19 crash, was actually retested within the past hour. It's not magic. Okay, it was retested within the past hour. Futures were down almost 30 handles. Futures right now are down 17. They were only down about 8 just about 10 minutes ago. So it retested this uptrend line and held, which I expect to hold, even if it slips and slides a little bit when European markets open and when our markets open at 9:30 in the morning. So don't sit there and freak out. Get scared, that's fine. Little fear is good, keeps the adrenaline going. But don't be thinking that this is the beginning of the end of this bull market, which is topping, no question about it. We still have a little bit room to go, and then we're going to have a nice, real fat 10% type of correction, and hopefully we'll be very prepared for that. And then the markets will resume. It's just the way it goes. All right. So, saying all that, this is a busy week. We have big earnings coming out. We have the notable ones. One second here. I just had a quick note here on my iPhone, so let me look it up. We have Monday, we have NXPI, semiconductor company, that should do well. Tuesday is the big one. Amazon, Google, Alibaba, Chipotle. Okay, a couple of names that I know very well. Earnings are a 50-50 shot. If the market stabilizes, then I believe that Amazon numbers are going to be fantastic. Google's numbers are going to be very good. I think Alibaba will pop. But if there is volatility and if there is more of this, margin crap going on, then obviously they're going to go up and then fall. Probably give us another buying opportunity. Wednesday, we have Spotify, we have Qualcomm, we have PayPal. big stuff. Thursday, this is a couple of names. There's a lot of companies coming out. Thursday, we have Penn Gaming. We have traded that before. We have Pinterest. We have traded that before. We have Snap, so social media companies, Snapchat. We have Fortinet, FTNT, which is a cybersecurity company, and then on Friday, just another big name, Regeneron, which has for I know some members who have held Regeneron over the past couple of months. I've traded it. Told you the stock would go to 560. It did. Pull back, and right now is around 500. I think it's a good buying opportunity. So that's basically it. So this is what pattern symmetry is all about. Nothing happens in a vacuum. Just so you all understand that. Nothing happens in a vacuum. It's all controlled. It's all controlled. There's an old saying, I used to tell my clients back in the days in Wall Street when I was a little bit smarter. No, I don't think so. I think I'm a lot smarter now. And I get to yell at myself instead of yelling at anyone else. Is that every crisis is in the stock market is the same, except for different reasons. It's not philosophical, simple stuff. Okay, for different reasons. They'll always find a reason to pull the market down or push it up, but in between there is a controlled set of numbers that are defined by massive algorithmic high frequency trading programs, big firms, okay, regardless of the Reddit revolution of the retail masses rising up, which I agree with, which I do agree with, because these bunch of these hedge funds and institutions, they're not in the business of helping you. Trust me, especially the hedge funds. They're all scumbags, most of them. All right. So bottom line is that's life. If you want everything fair, then go to a circus or a fair, and go, have fun. The markets are not fair. Just remember that. This is basically eat what you kill. So get rid. That's how you got to think. You don't be expecting fairness from the market. Oh, great numbers come out. Why is the stock up? So please don't complain the market, because nobody gives a crap whether you're complaining or not. So saying all that, through all this is a controlled set of numbers. And that's what I want to really impress upon all of you. And I know many of you are catching on to it. And if you look what is going on here, here is 2021. This is picture perfect. I love it. Okay, let me get my drawing tool, change the pen color to a darker color. Here's 2021. This is when we started. We started with a big crash, a thud on January 4th. A big flash crash. I know most traders have a memory which maybe lasts an hour. It's like, what have you done for me lately kind of memory. But try to understand that the charts remind you as to what happened. I certainly remember. So it started with a huge crash. Everyone's like, oh my God, it's all over. So take it easy. Many different indicators were deeply oversold. Go listen to my webinar. Look at my Twitter feed if you scroll back down to that date. Okay, so take it easy. Start buying in. Okay, so guess what happened? The market took off. The markets never take off in a straight line, right? They zigzag their way higher, test levels, different patterns, W patterns, dragon bullish, falling wedges, inverse head and shoulders, range breakouts, you name it. Basically, they're climbing through, they're basically cutting through volatility. And I remember the VIX had shot up, because I show the VIX charts quite often. I know many of you are focused on that very well. I know Leah does a lot, because I know when people hit like, and I really have to demand something from all my members. If you are looking at a chart, even for a few seconds, it doesn't hurt you to hit like. And if you really like it, hit like. So, because that gives me some social feedback as to which ones people are more interested in. It helps me in content improvement. So please do that. I know the same set of people hit likes. Why? They're the only ones who are, who like that chart? No. Many of you look at it, maybe, you're benefiting from that chart, but you're too lazy to hit like. So please do that. It's just a personal request, and it will help you in return because it's a social feedback mechanism. That's why we have the like button, thumbs up, right? Exactly. So please do that. So here was the beginning of the year. So that's a major support level right here, 36.52, right there. And guess what we did within the past hour? We almost went and retested that. Futures are only down 6. I wouldn't be surprised if they go positive, like within the next half an hour, or less. So basically, it retested this critical support level, which was the beginning of 2021, right there. So markets zigzagged their way up, and every little zag, okay, every little zig, let's say zig is positive up and zag is negative down. So every little zag, little down, everyone's like, oh my God, it's all over. No, I'm not a crazy bull, trust me. And you know that from my webinars and my comments. If I was a crazy bull, why would I have bought these tactical shorts here and there, including on Thursday afternoon, late afternoon, which went through the roof? But I am a long-term bull on the US economy and US markets. So saying all that, it zigzagged its way up, got up to about 38.24, and then went into a sideways range. And each of these ranges are roughly about 100 to 200 Dow points, each of these ranges. Okay? So each of these lines that are drawn here have this one, I think I'm going to remove, 1 second. Each of these lines that are drawn here, there, it's more clear, are not drawn for fun. They are inflection levels, supply levels where the selling comes in, and demand levels where the buying comes in. This is within a range. These are major supports or pattern breakouts, like neckline breakouts and stuff like that. And 1 second, this was a major one. And you can see what's going on. In one single week, starting last Monday, we went from creating, hitting the upper end of the range, attempting to break out, to basically going back and giving back the whole month's gains in one single week. But in between that, we had huge rallies, pullbacks, attempted breakouts again, and then the finale, which was Friday, 4 p.m. So if you look around your different chat rooms and stuff that you guys go to, which you should, traders you talk to and stuff, a lot of them are just absolutely, majority of them, I'm telling you, are scared as hell, or they're just getting bearish. But from a tactical standpoint, whether it's a 1 to 3 day rally, whether it's a 24 to 48 hour rally, which you can make a lot of money on, and remember, all it takes is less than a second to hit the sell button, right? On things that you're up on, take advantage of it. Don't sit here and prognosticate like, oh my God, what's going to happen 3 months from now? I have no frigging clue what's going to happen 3 months from now. But I do know that the markets will probably hold up their own till the end of the first quarter, which is March 31st. Is March 30 days or 31 days? I don't know, whatever. March 31st, end of the first quarter. And I
31.
think 31, there you go. I think the second quarter is going to be very rocky. It's my opinion. But I can sit here, I can show you on the chart, but as if, so I don't want to go too long on the long-winded, on the long-term forecast on what the markets will do. Let's stick to the short to intermediate term forecast. 1 second here. Short to intermediate term forecast and make money. Because there's a lot of risk in the market, believe me. China's been sucking out money out of their economy. That was also one of the reasons that you never heard about on Friday, because I saw it on Thursday on Bloomberg at late night, whatever. So this headline passed through, but they never talked it here. China basically took out a significant amount of liquidity from their overall banking system because they're a little bit scared that their banking system is getting a little too frothy. In other words, too much money is going in there. So they took it out. So that also creates a ripple effect on global markets. And I'm sure that was one of the reasons too why stocks were down here, because every single market is somewhat interrelated, just so you know. So let's stick to this chart here. So we did this and we came down, and these are a lot of volatility, mind you. There are hundreds of points. Then we hit this, and then we hit exactly where we were on January 4th. Beautiful. So where do we go from here? Well, where we go from here are exactly shown on these lines here. Let me just clean it up a little bit. And as they approach these support levels and resistance levels, I can assure you the markets will basically have mini flash crashes. Okay, mini flash crashes are 100 to 200 points. Big flash crashes are 400 to 700 points. Here's a simple rule of the thumb. Given the market structure right now, unless something really fundamentally happens in the credit market, which the credit markets are fine, okay, thanks to the Federal Reserve Bank of America, okay, and Jerome Powell, the credit markets are fine. Markets won't go down more than 800 points. Just quick rule of the thumb. And you'll notice that happens a lot. Even in the worst flash crashes, markets refuse to go below 800, maybe 820, whatever, and boom, they snap back. The 100 to 200 point drops are more tricky because there's more room to fall. Of course, I focus on charts and try to keep you guys updated as much as possible. And then you guys take that information and do what you want. So that's what I'm saying. Max move, max downside is roughly 800 points on the Dow. And that's a buying opportunity. So saying all that, if you notice one thing here, first glance, that this pattern symmetry, by the way, was replicated here also. And I mentioned that this was back in right before Christmas, just to show you these are volatility clusters and how similar they are. I noticed this, and I told you that this is what it was going to do in January. That was one of my reasons too why I said go long when we had this drop, because it was very similar. And that's why I put a box around it, a rectangle, so you guys could focus your eyes on it, okay? And that we would move. And that's exactly what it did. Well, guess what? If you go back, now that you've seen that, let me get it out of the screen. This move here in the past week, let me set this up. This move here in the past week is very similar in all these dancing candles to this box. So I will take a copy of this box, gently slide it over so that you all can focus. Gently slide it over and put it here. Okay, and you can see that it is quite similar. Just let me see. There you go. So we are the early stages. So look at this box and what's inside there. Quite similar to what is happening here. So best case scenario on a short-term basis, and short-term can mean hours, can mean a day, we get up to this big fat green line here, which was where the markets were at the end of, where the markets were overnight before the markets opened on the first trading day of 2021, which is roughly 37.75. Now do the math. We're at 37.14 right now. We're at 37.14 right now. As of the close on Friday, we have perked up a bit. That's for sure. We have perked up. But let's look at Friday. We're at 37.14. If we get up to 37.76, you're talking about 60 handles on the S&P 500. 60 times roughly 7. We got about 400 to 450 points that we can bounce to real fast. And I can assure you right there are going to be sell programs. Now, will it happen in a straight line like this? Could happen. Could happen. If the margin call pressure is forced margin sellouts are diminishing, there's going to be a big rush of institutional money into the big cap techs, which got hammered. If Amazon delivers great numbers, if some of the names that they just mentioned, Amazon and what were the other ones, that I just mentioned, deliver some decent numbers and decent guidance, it's going to be fast and furious. Boom, just like that. It'll drag the S&P higher. Of course, it'll drag the QQQ, NASDAQ 100 higher, and it's going to be very quick. So if you're sitting there trying to see, oh, are you feeling comfortable about buying this? You know, it's going to be too late. The best trades ever are done when you're in a state of discomfort, in a state of mental discomfort. But you're tracking the charts, you're seeing those stochastics at extreme oversold levels, you're looking at the VIX creating a red candle off these enhanced levels or spikes. So you say, okay, let me try to be a robot. Let me get in there. You're not feeling good. You buy it, then it slips and slides a little bit. Then you buy a little bit more. And within 24 hours or less, boom, you have the kaboom moment where you're selling them opening up, where futures are opening up 50 handles on the S&P 500. And how many times have we done that? I don't need to prove myself. It's all there on my real-time Twitter feed. And we sell. And you feel great. So point of maximum discomfort, and if the technicals match, are the point of maximum buys, or at least stepping in. Point of maximum comfort, where you're feeling a little too happy, get the heck out of Dodge, or do whatever you want. I'm just saying. And it's a fact. That's the way it works, but it happens very quickly. So this week is going to be busy with earnings, with the other drama going on, with the short squeezes, and a bunch of economic numbers and stuff. And it also happens to be the first week of February. Now, generally speaking, all right, let me stick to this. So the pattern symmetry is very similar, very similar. Here's your downtrend line. We could go up to 3,800. Okay, not just here, we could actually overshoot to 3,800. This is a major downtrend line. If we break this, the next level of real fast contact will be around 3,824. Do we get back to the previous highs? I personally don't think so. But hey, I'll take every single one of these ranges, because every single one of these ranges are very nice, profitable money. And I'm just talking about the broader market. Individual stocks are a different story. So that's the way it goes. Now, internals are also looking good. We created a positive divergence. A positive divergence is simply, many of you know what it is. You created a lower low. Since Wednesday, we actually created a lower low on the indices. However, if you look at the internals, it created a higher high, a higher low. So the price going down, internals are actually overall moving higher, even though they pull back. It's not. It should be. It never went down and retested the lows. That's known as a positive divergence, known as a positive. Okay, that's the early signal that the real pressure in the markets was, even though price movements were lower, the internals of the market were actually holding up, which is good. Okay, so that's basically it. All right, end of session. Good night. All right, next is looking at a chart from this is actual E-minis. That was actually minis too, but this is Think or Swim, so it's a little bit more colorful, so maybe keeps you guys awake. So here's your 50-day moving average. This is the daily. I showed the 50-day moving average. Now, just because it kissed the 50-day moving average on a Friday, just so the rule of the thumb, generally it'll slip. They'll suck you out. There's a lot of regular traders got sucked out because they have stops at the 50-day moving average. Oh, wow. That's like as if it's a genius thing to do. So they got sucked out. They didn't buy. And if we open up strong tomorrow, they'll miss the gap up. But that's okay. So basically, you generally, if you look back at past scenarios, and this red line is the 50-day moving average. If you look at past scenarios going all the way back, we generally slip below that, and then it bounces. If the market loses its 50-day moving average, there is a 70 to 80% probability that it's going to try to reclaim and go above that. And above that means that it will probably hit this orange line, which is the 34-day moving average, and those numbers. And so a couple of hundred points, and then they sell again. It's all mechanical, ladies and gentlemen. All right. So that's exactly what it's trying to do. So we have a hammer reversal off this uptrend line, and this uptrend line started on October 30th. Remember on the media they kept on saying this was the biggest sell-off since October. Well, yeah, which is a great buying opportunity, wasn't it? because right there on October 30th, we were down here at 3,230, right? 3,230. Nice fat hammer. 1, 2, 3, 4. We'll count this day also. 1, 2, 3, 4, 5, 6. 6 days in a row, the market went ballistic. Ballistic. I can assure you that the regular retail trader, price watching retail trader who doesn't really quite track the way we track the market with internals mixed in with the externals, which are the price, which are the candles and stuff, that they were in there. They probably got in on the upper end of the range, and bang. I remember the markets opened up 1,000 points here, something like that, like crazy, on the 9th of November. Came back, everyone kind of freaked out, like, oh my God, gave back everything, and then it kept on going higher. So basically, we see that same type of hammer developing here, very similar structure, very similar structure. It held the uptrend line, and this yellow line is the trader's line. It's a 5-day moving average. So whether you're trading a stock or whether you're trading the markets or trying to understand what the markets are going to do, then when I'm showing this, this is the short-term momentum in the market was broken because and you can see it's nosediving, but it was nosediving here too. Okay, this was the 27th, which was what, Wednesday, Thursday, Friday. Yeah, Wednesday. That's some heavy-duty selling. So I'm not taking it lightly, but I know the reason behind it is because the other short squeeze stuff that's going on, and that's the reason Apple went up and then boom, went down and took everything down and all that stuff for reasons we just explained. So fundamental reasons didn't change. It was more of a money management, satisfying margin calls and all that stuff, bookkeeping type of movement. So okay, so that's basically it. Now, what's happening with the internals? The other thing that I noticed is that we had huge volume on the futures market. Huge. Now, why is a huge red candle, especially the second or third one, from a contrarian perspective, positive for us tactical traders? Can somebody answer that? Not Paul. What does a huge volume? Look at this. They traded 2.62 million contracts of the E-minis on Friday. And then on Wednesday, it was 2.5. So why is that good? Come on, guys, somebody do it quick because we want to keep this session, like my friend Heisenberg says, stick with it. Let's keep it short.
Liquidity.
This is stupid. I know it's liquidity, but why is it positive for us traders? And I gave you the answer. It's a contrarian move. It's thinking outside the box. It's opposite of what the lemmings and the sheep are thinking. Nobody, Leah? Nobody? Okay, I'm not going to wait for an answer. It's called capitulation. Go ahead, Leah.
Buy the dip.
Okay, that's another silly answer. Okay, it's called capitulation. It's when you throw up. Okay, so when you see capitulation bars like this, it's good. That means things got really oversold. So when you see the second capitulation bar, 2 of these bars this tall, forget about the numbers, this long, these are volume. That means a lot of good stuff was thrown out for reasons of forced institutional margin sellouts, for reasons that were happening with the market with the short squeeze and stuff. So that makes things cheaper. The same thing happened here, which was a monumental buy in the market. This was a capitulation bar. And it took 24 hours for another little bar to appear, and then within 48 hours, right? This is each day, each candle is 1 day. See you later. This move alone, that week, the first week of November, SPY calls went up 780% if you got in around these levels. So when you get a flush like that, it's common sense. When you get a flush like that, great. you get a tactical reflex rally. It's known as panic capitulation. I even put that on the Twitter feed, so all of you please try to focus a little bit more. We love capitulation and panic. Give it to me. Give me Apple here at 130. Exactly. That's why we bought it. Next, let's look at, I love that. I love these capitulation bars. I mean, these are big. These little ones are the tricky ones because you don't know whether the next day it's going to, when you get like that, it's like, okay, short term, we're flushed out. Doesn't mean we can slide a little bit lower, but, and then these hammers start. Okay, let's take a look at the stochastics. Pretty damn oversold. Pretty damn oversold. Can slip a little bit lower, similar to this, and could happen by as early as tomorrow morning. And once it gets this oversold, it always bounces, unless there is a fundamental credit crisis, which we are not having. Next, Mcclellan Oscillator. This is what it got to back at that monumental period back in end of October, which was a great buying opportunity. Great. Okay, that was just a few months ago. So got down here, we're pretty much down there. You get down to minus 250, the Mcclellan Oscillator, forget about sitting there and stuff. Buy the market, SPY, QQQ, this, that, buy some stock you like, do whatever you want. You want to play the pure market, just buy the SPYs, the Qs, the DIA, which is the diamond, Dow Jones Industrial Average Diamond. We haven't played that lately. I'm going to start doing that because they're cheap and they move. And the Dow moves these days. So that kind of stuff. Now, what's happening with the overall MACD? The MACD got seriously clobbered. It came down pretty much to those levels, maybe a little bit more, to where we were on the monumental buying bargains we got on the 30th of October. We almost are there. Now, can it get wider? Sure, it can. But remember, sometimes it gets wider, but then the market's already turning. So I will have to keep an eye on that. But the other ones are certainly so net, the probability of a reflex bounce taking us over, recapturing the 50-day moving average and heading towards the right there, the yellow line and the orange line. So you're looking at from where we are right now. Well, we're not trading futures right now, but basically we can get up here. And the chart that this is my roadmap. This is what I trade, and I know many of you look at that. All right, the same thing is happening here. This is the same. This is the E-minis, the one that I showed you. This is the investing.com version. Very oversold, very similar to that. This one is almost there. We just saw that on Thinkorswim. But I have the Bollinger Bands here. Now, can somebody tell me why, when we overshoot out of the Bollinger, remember the Bollinger is basically the cloud, right? The trading cloud, the ranges. When we have a Bollinger overshoot, in this case, off the lower Bollinger, or a Bollinger overshoot out of on the upper end, what generally happens? Okay, anyone know? And I've mentioned this on my Twitter feed too a few times. Go ahead.
Reflex.
Yeah, you got to fix your earpiece and stuff, because every time you're talking, boom, it's like a little Martian zap directly in my eardrums. But yes, when you get out of the Bollinger Bands, you always get back inside the Bollinger Band. Always. Now you might stay out hanging like a drunken monkey off a tree, like hanging like, oh my God, I'm going to fall. But he's going to get up on the branch. Exactly. Just visualize that picture. Okay, a drunken monkey. All right, that's good. So bottom line is that you can stay outside the Bollinger maximum 24 to 48 hours. And once you do that, you snap back. So that's the snapback, which takes us and attempts to go above the 50-day moving average here, the red line, and wherever it goes after that. Okay, but Bollinger overshoots on the upside are always sold. It happened here. It didn't change the general direction of the market, but it's always sold. And the same thing is happening here. And I noticed that same thing happens on the VIX, and I've showed it to you guys before. So the only request that I have for all of you, for your benefit, not mine, trust me, okay, is when I'm writing those comments, Bollinger overshoot, stuff like that, just, and I put that line, expect rally within 24 to 48 hours. There's a very high probability that's exactly what's going to happen. Not because I'm a genius, that's because the machines, that's how they do it. All right. So go ahead, Paul.
I'm on a better mic now.
Yeah, you are.
Yeah, just curious on your thoughts, because I agree with everything you said there, like the capitulation candles, the big volume. We're outside the Bollinger Band. Looks like there's a big snapback coming. What's the main risk of not being able to get to all-time highs quickly, in your opinion?
The main risk is the stimulus bill, because this is going to get down and dirty, okay? Because I've been tracking that very closely. They're not going to get what they're looking for. The market's kind of expecting it. It's also exhaustion. Markets can't continuously go higher, so you get exhausted at one point. It's just like a sprint. It's more like a marathon, right? So you sprint, you're going to stop a little bit. So that's the other reason why I don't think we can get to those new highs. Now, we can blow past the new highs. By the way, this is the weekly chart, which was drawn before the fact. Look how beautiful it is. Look at this uptrend line, the green one, and then I'm going to further elaborate on Paul's question. Look how it's bouncing up the uptrend line. So it's pretty damn good. And we moved a lot away. See, this is your 50-day moving average. We moved a lot away from it. So every time it happens, it reverts back to the mean. So, but answer to Paul's question, I don't know. Maybe we can get new highs, stuff like that. But my point is that we need an infrastructure bill. If the Democrats and the moderate Republicans or any Republican on the GOP on the other side, they can agree on an infrastructure bill, trust me, the market's going to go berserk. But the other reason is seasonality. February, generally, Valentine's Day, till Valentine's Day, the markets are okay. That's what I've seen. And then after Valentine's Day, they kind of lose air. They do. Okay, so, but then there's a lot of earnings coming out in February, some of the late ones, right? And all the way through February. So individual stocks we can play. So if we get an infrastructure bill in tandem with some sort of reasonable stimulus bill, the market can go a lot higher. But if we don't get either one of them, or maybe get one but not the other, the markets, markets get a little tired. So but for the 3,900 to 4,000 max move. I've said this to you guys before. I'm saying it to you again. It's a round number. It's a lot. And guess who said the same thing? Tom Lee, the legend. Okay, Tom Lee, the ultimate market analyst. He said around 3,900, 4,000, the market should pause and have a nice technical drawdown. He mentioned that 2 weeks ago too, which makes sense. But without getting too much of this market stuff, we still make a lot of money on different fronts. Their stock's still green on days that the market's red. So it's a slightly different. So there's always ways to make money. So anyway, so enough of the markets. Now, let me see here. Let's look stocks, right? That's what we're here for. So let's take a look at. Let me draw my screen in. Apple. Apple is from this level. This is a chart that I drew, and I showed it to you all. It's a megaphone pattern, all that good stuff. So there was a gap here. Here, let me just put it this way. Change the color.
Apple actually had a correction, Frank, last week. It hit an all-time high on Monday, and it was down just over 10% by the end of the week.
10%, huh?
10.3%, so it already had a correction.
Beautiful. You buy Apple on a 5% correction. Thanks to the short squeeze and all that shenanigans, you got a 10% correction. From a technical standpoint, all the parameters match. Thank you for providing me with that number. I thought it was more like 8% or whatever. Anyway, there was a gap here. It held the gap for a little while. There was a hammer reversal going on. This is an hourly chart, so showing you what happened on Friday. And then boom, went down. To me, even if it slips and slides, somewhere between 128, 129, we already started buying it here. We're always a little bit early, as you know. We like to cost average down. The early bird gets the worm. They do, okay? And they all fit in. So Apple basically, on a simplistic basis, should be able to bounce up towards its and I had put arrows and everything on my Twitter feed. You know, when you look at those charts, just screenshot them or wherever, save them somewhere so you can look at it. So on your computer or on your iPhone. So we could get $4, $5, $6 on Apple. Best case scenario, 143. We have the 145 calls, which are way out of the money. Which calls do we have? I can't remember. They're a couple of dollars out of the money, and they're cheap. And we have till the February 12th. Now, there's a reason too. Valentine's Day is 14th. You don't think Apple's going to sell a lot of phones? With the people now going to gift Apple phones and Apple products, not just phones, obviously. All their other great stuff, of course. So yeah, Apple's a great play. Deeply oversold. When I put these markers here, just to get your eyes trained to look at it, deeply oversold. Last time it got this oversold was on the 19th of what is it? 19th of December. Here's Apple. Buy, buy, buy. Okay, we're back there again. It's a buy. Whether it's a buy, 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 we shall see. Doesn't matter. Even if it slips and slides, as long as we start to see the stochastics turn, I'm going to be a buyer. Now, will Apple go up all the way up to the upper end of the megaphone, which is 150? Hey, it can happen. It can happen. Apple's into autonomous driving. What if they announce a major partnership with one of the major high EV companies, electric vehicle companies? Boom. It's going to go like you're going to see a gap open of like $6, $7, $8. It happened twice in the case of Apple over the last couple of months. So good. Next one. Let me just clean this up for you all. Raise all drawings. Okay. NVIDIA. Earnings are this week, right?
No, next week, Frank.
Next week. So great, we have more time. So NVIDIA, I explained it in very excruciating detail on my last webinar, so I'm not going to go into that much detail, but let me just give you a back of the napkin calculation. I think NVIDIA will break this range once and for all.
Frank, we do have Nintendo reporting tomorrow, and they have NVIDIA chips.
There you go. So here is NVIDIA's range. It's basically 555, two little spikes at 556, 557. This is the daily chart. So this is for swing traders, okay? And the bottom end of NVIDIA is basically 500. And it is trading at 518 right now. It closed around 518, 519. All right, so it's right here. So even if it dips here, I believe this is extremely solid support unless NVIDIA, what's his name? What's the CEO's name?
Jensen.
What's his first name?
Jensen Hong, or
Jensen.
Jensen
Okay.
Hong?
Jensen Hong. Okay, so we'll call him Mr. Jensen. Unless Mr. Jensen has lost all his marbles in his head and all this great stuff that NVIDIA does, not just in gaming, autonomous cars, they're into everything. Okay? Unless he's lost all his marbles, he doesn't know what the hell he's doing, then the 500 level is the ultimate support. Ultimate support. And if NVIDIA does deliver what they're going to deliver and give some solid guidance, you can expect the stock to go back up to these two levels, which are massive resistance, which is $590 to $600. NVIDIA calls are still affordable, unlike Amazon calls, which still move, but you got to pay up for them. Okay, so that's NVIDIA. So my bet is that NVIDIA moves up towards the 550 range, that's a solid move. That's $30, $32 from where it closed at. Not bad. It's good. Next, I'm just showing you things that are on AMD. I think AMD is a screaming buy here. They had strong numbers. I did mention in my previous webinar that AMD was slightly, from a valuation standpoint, was pretty high, but their numbers were strong. They're firing on all cylinder. What's her name? Lisa what?
Sue.
Lisa Su. There you go. So fantastic. Gotta buy this.
And Frank, the PE ratio on this now is only 41. Their net earnings went up 730% this year, or 2020 compared to 2019.
AMD should be a $500 frigging stock instead of GameStop. And I call GameStop when it was a $7, $8 stock, so I have the right to say it. But
Funny you said that, Frank. Funny you said that, because they're actually talking about that on Reddit. AMD is a potential target for the
yes.
Wall Street crowd.
Yeah, because AMD is also pretty heavily shorted. I saw that too. You sent me the info, then I saw it too. It's also one of even Apple is somewhat shorted. So we want the real companies to have the real big short squeezes, okay? So so bottom line is, this also has a pattern, and I am going to just draw this to you. This was after hours. It was over $100. It was beautiful. This is the day it came up with earnings. And I'm like, why is this thing still, it was like dancing around like it was dancing around like monkey on crack. Okay, that's good. MOC, monkey on crack. Yeah, it was like bang, 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 green. And I'm like, come on, please hold it up here, And then the next morning it opened up 95, and of course, things unraveled, and that was because of the market too, not AMD's fault. So, but what are we noticing here? We are noticing a beautiful, beautiful falling wedge. This is a beauty. This is a beauty. Love it. Now remember, if the market gets really nutty, then these charts are not going to comply within the time frame that I'm mentioning, which is this week. So just keep that in mind. They're going to be sliding and slipping and sliding, and for no fault of their own. But just from a technical standpoint, it is a beauty. Look at that. And what do falling wedges do? This yellow dotted line is known as the pivot. And when it breaks above pivot, it starts to run. Very oversold. You can see that on all fronts, both the slow stochastics and the fast. Not rocket science. Anyone can understand it. So basically, 1 second.
The Dow just turned green, Frank.
Told you. Let me see here. The YM turned green. Yes, it did. It's up 17. And where is the E-minis right now? E-minis are almost green, down a point. They're obeying the Clueless trading charts, okay? And even if it slides a little bit in the morning, don't worry about it, because now you know where it can go. Stay informed, all right? Instead of just being a price-chasing freakoid. That's what most traders are. So what happens to falling wedges? They break out. High probability breakouts. Why high probability? Oversold, oversold. Simple. What's the breakout? I'm looking at, given the fact that Apple was down 10+%, AMD was down, wow, AMD was down how much? Not 16, 16 divided by 100. AMD was down 16%. It's a joke since Wednesday, 16%. Like they say, fast and furious. The faster the drop, the faster the move higher. So do I think it's going to go back to 100? I hope so. But I'll take this neckline here at 92 as my first stop. But AMD, if the market stay what it is, AMD will open up to $3. And remember, AMD is not a $15, $20 type of mover, right? We know that. It's a civilized stock. So there's another one. Calls are cheap. Get in there. Amazon. Now, Amazon's an interesting story because and I mentioned this in detail on my previous webinar. So again, I don't want to you guys should just play it on YouTube and see it. Where's the pivot? Amazon's in this extremely choppy triangle. See that? Right there. Low on Amazon, worst case scenario, it's going to come and hit this major supports, which is around 3,000. Let's call it 3,050. So that's about 150 points lower, which can happen overnight. If Amazon does deliver and there's no flying ointment or whatever, then it's going to break out of this range, which is 3370, break out over the upper end of the triangle, which is the downtrend line, and literally rush towards 3,500. Literally. I've seen Amazon go up 300 points, and we all have. Okay. But so that's basically what it is. So Amazon is kind of mixed.
You know, one thing about Amazon, Frank, is it doesn't have all the hype going into it like Apple and Facebook did. Like Apple already had the priced in earnings, and there's nothing priced in here. In fact, everybody's scared, and I know you love going into earnings when everybody's scared.
I know. So the thing is, Amazon did have some price increases up to 3,600 and stuff like that, but on a percentage basis, that's not too much. 300 points on a $3,000 stock. Don't forget, $3,000 stock, $3,200 stock, not that much. So Amazon's kind of a mixed picture. I can never predict earnings unless something is really oversold. In that case, I can predict earnings. It's going to go higher, okay? Because they have to be really terrible for it to go lower. But Amazon's kind of in the middle ground, so that's where we are.
And if they ever split their stock, that could make a big difference too.
There's a lot of things they can do, believe me. Shopify. I issued a buy on Shopify based on a very simple technical pattern. And if you kindly look, then bought a little bit. Okay, why? Quite simple. And this is another beast. I don't have the date, but Shopify is also in the latter middle of the month or what?
Same week as NVIDIA.
Love it. There you go. All right. Go on Robinhood, buy a fractional share of Shopify. I'm just kidding. Do whatever you want. Nice triple bottom. Nice triple bottom. No rocket science here. All right. Oversold. Oversold. No rocket science here. Seriously, keep it simple, stupid principle, right? The KISS principle. Triple bottom, major support at around 1,060. Around 1,070. Let's not get into penny pinching about dollars, okay? So what happens from these levels? Bang happens, bang happens. So even if it doesn't, forget about the earnings play. Just on a regular bounce, stock moves, as I've mentioned, and as you've all seen, 20 to 30 points on average. Gets up, let's say it gets up towards 1150, guess what? There's going to be some sell programs pulling it down to 1130, 1120. So play the $20, $30 bounces. Same thing here. Here, it basically went bull flagged and then just ripped the shorts. Well, can that happen? Sure. But it's a very similar pattern symmetry here, okay? It's a very large W, which this is an hourly chart, so traders can use this chart, and I put it out there on Twitter feed, so please do what you need to do. If you look at it, it's a very large. Can somebody tell me what it's a very large? Let's see,
Dragon bullish.
There you go, sir. And I hope all of you saw what Paul saw. It's a very large dragon bullish. Let me try to get it. I need to get a separate program for these things. Okay. 1, 2, then it moves sideways, consolidation, jumps up again, boom, boom. So it's a complex W, but it's a W. That's known as a dragon bullish. Okay. In the world of perfection, which some traders want, there is no perfection. A dragon bullish is like this. In a world of trading, A dragon bullish can basically be like this, where it moves sideways for a whole bunch of days, but it doesn't really move sideways. Each of these points are very tradable. They're like 100 points, 80 points, this range.
Yeah, Frank, you can see a more defined dragon bullish there, just using the left part at that top. Yeah, right there.
Yeah, exactly. This is a more defined one. Thank you for pointing me to that direction. Exactly. This is more of a defined one with the first stop here in the upper Bollinger. That's 40 points for you, ladies and gentlemen. Okay? That's 40 points. 1100 to 1150 or 1098 to 1150. Okay? So if it really breaks, then you got to see 1250. So you got 200 points here. I'm sorry, 1100 to 200. Yeah, 150 points. So this, you notice this was a dragon bullish too. Love it. And for active traders, and we have done it time to time, I don't trade it every day, you could have traded this for a good solid 50 points. So next time I hear any complaints, I'm just not going to respond. Just kidding. All right. So that's it. So we look at that. Let's look at Baba. What is Alibaba doing? I told you guys that Jack Ma would show up in public, and he did. And that's the day the stock was up 14 points. It's common sense that he's not been sent into in somewhere into the Mongolian or Chinese desert prison camp, okay, or the gulags in Siberia, like Putin has done to many of his business associates who didn't get along with him. He just basically said, "See you later. Go live in the Siberian tundra." Okay, billionaires. So I need to do that to him. He's China's ultimate success story. So this chart oversold on a short-term basis, technically. The slow stochastics is still kind of above 80, which is good. So let's take a look at what the upper picture is saying. Volume is very light on the sell side. We like that. Here is another huge red bar. By now, you guys should know that's a capitulation bar, and we started buying it here, if you remember, right? And the stock shot up almost 25 points in 2 days. That's why we call capitulation. It's a liquidity event of panic. Okay, panic. Like, oh my God, it's all over. Okay. Prices are the best at that point. So this one basically is the same thing. You notice here that's a Fibonacci retracement chart. We are basically going back and forth. Here's your 50 fib. I looked at that bottom and then this top. Okay, so two ranges. So 50 fib is 265, and guess what the stock is was doing for most part of last week before it dropped, because of the market. It was hanging around 265. They're like, okay, let's sit there, have our little triple espressos, let's see what happens. And then bang comes GME. Okay, down a little bit. Chart is fine. Chart is fine. What their numbers are going to be are less important. Well, that's important. It's to what they're going to say about Ant Financial, okay, which is the subsidiary, which is digital payments and stuff. And that's the reason why he got into hot water with the government, because the government doesn't want. I heard a very fantastic analysis as to why the Chinese government is very why they put restrictions on Ant Financial, okay, because they know what a credit crisis is. China's economy is very leveraged, lots of borrowing, okay? Businesses are heavily leveraged, huge debt on the balance sheets, far more than ours. So they are rightfully mindful that if they go completely digital, that people are going to go nuts. It's going to be another GME type of situation that's going to put the whole Chinese economy at risk. So they basically try to temper it down by putting some restrictions on Ant Financial. And that made sense to me. If you're a company, if you are seeing everybody going nuts, putting money into Ant Financial, taking it out of the regular banks, moving digital payments, Bitcoin, cash, like all over the place at the flick of a button without any regulation, that's a little bit dangerous, even though it's great for the consumer. That's the reason why they put the restrictions down a little bit. Makes sense. So Alibaba said, okay, all right. And of course, the Chinese banks want to have more control. So it's not a big thing. This is a serious company. And they're not getting delisted. All that stuff is now out of the picture. And I believe that Biden is going to give a very serious foreign policy speech this week. So that's going to be interesting. They're going to be hard on China, at least on the face, but under the table, they're going to talk. Okay? Because they know it's important for the US markets and it's important for US business. And US corporate leaders are begging to basically have a slight reduction in tariffs so that China will do a reduction in tariffs. And you watch what companies do, like Boeing and the commodity companies and stuff. They're going to go through the roof, like Caterpillar. It's just going to go through the roof because that's their biggest market. So saying all that, there's a gap here. So here's your uptrend line. I believe the stock should capture the uptrend line. Can it do it on earnings? Maybe. If it runs up here, which is there's a gap here. Watch. See this dotted line? Those are gaps. Watch. There. There's a gap here. There's a gap here. And Alibaba calls are inexpensive and they move. They make money. Okay? This is a very defined inverse head and shoulder also, but let's look at the gaps. We've got lots of gaps to fill. There's another gap here, which it filled. Watch. If anyone has any questions, just stop me. Here's another gap right there. That's 269. We kissed that gap exactly on the 20th of January, exactly. And I've shown this chart to you guys before. And then it pulled back from that gap. Here's another gap here, right there, right there. Guess what it did? It's basically hugging that gap. So bottom line is, barring any unforeseen terrible news, bad earnings, they're falling out of favor with the Chinese government. Jack Ma shaves his head, and loses his marble like Jensen Huang. Yeah, Jensen Huang, and they all become very stupid people. Barring that type of scenario, stock's going higher. Stock's going higher. You don't have to go nuts. Buy a couple of calls. Buy some stock. I don't know what your portfolio does. So lots of gaps to fill. Best case scenario 305 on a swing trade basis going towards March. Short-term basis, I would be looking at Alibaba at 270, which is 14 points from here. I'll take 14 points any day. 256.09 it closed at, somewhere around there. Yeah, 253 it closed at. So I'll just take the first gap. Sure. I'll take 260. 7 points. You got to double on your calls. And we got this. A very defined inverse head and shoulder. Left shoulder, right shoulder, neckline, which happens to be the gap, right? And a breakout above that will open up blue skies. Not in a straight line, but it's going to fill each gap, pull back a little bit, fill each gap, pull back a little bit. There you go. This is a beauty. It's a beauty. Hey, when is Chinese New Year? Or it's over?
I think it's the 12th.
Of February?
Yes.
Wow, that's another major catalyst. Alibaba is going to sell like everything. That's fantastic. Thanks for telling me that info. 12th of February. There you heard it from Paul. There you go. That's another major positive catalyst from an online shopping standpoint. Alibaba's numbers are so big, I don't get my hands around it.
Sorry, Frank, it's the 11th. 11th is the Chinese New Year.
11th, okay. Alibaba's the sales numbers are bigger than Amazon's, right? I think it is. Isn't it?
Amazon's
Overall?
king of sales. They got, I
No,
don't
but
think anybody.
Amazon's global. Amazon's not as global as Alibaba. Alibaba sells every corner of Africa, India, everywhere. And but I don't know what the sales numbers are, but I know they're big. They're very big. When they do those Singles Day stuff, the numbers are so big, like whoa, So anyway, let's move on. So there you go. This is definitively a buy, both from a fundamental basis and a technical basis. Square, love this stock. What can I say? We trade it, pops up, we sell it, and we trade it. This is your short-term trading chart on thing, very defined. This is a megaphone pattern. At one point, the stock is going to go to $300. Let's see where the megaphone ends. $270. It will get there. I'm telling you. It's a Bitcoin correlation play. It's a play on digital payments, and it's just serious growth company. I mean, I don't know what to say. You know, that's all I'm saying. It's a tradable stock. Options are not that crazy expensive. In fact, they're not that expensive. And I'm going to draw a trend line. Or I can draw this trend line. Okay. And let me take this one out. Clean that up for you, ladies and gentlemen. You go to a fine restaurant. You want clean cutlery. You want a clean table. You want clean table cots, right? So you want a clean chart. So there we are. Blah, 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 blah. Very nice. Okay. So short-term stochastics, deeply oversold. Stock was actually positive, I believe. Yeah, it was positive on Friday. I can't remember if it went negative, which is very strong. Here's your that's why I put a marker here. Here's your short-term support, which is around 212, 210. Stocks around 214. The trick with playing this option, there's no trick. It's like if it opens up $7, $8, like sell it. And then you'll see it come down a little bit, you know, just normal profit taking, and then it starts to turn again. It never gaps and goes. In other words, whatever it opens up, they'll always sell it $2, $3. There's a flurry of selling in the morning within the first half an hour, and then it turns around and goes. So it's great. You can, on a short-term basis, this is a bull flag, but I'm looking at it more as an inverse head and shoulder here. Double bottom. Very nice. Support around 210. Bang. Uptrend line contact is 222. I'll take $7 any day. Neckline is around 226, 228. That's when it gets some fierce sell programs. All right. Right around this level. But if it breaks above that, 238. And then of course you can do whatever. So I'm basically targeting, you know, 210, 224 on a swing basis, 14 points on this. But Square is also another company that can come up with some enormous, ginormous type of announcement on their Bitcoin holdings or something like that, and the stock could just rip. So I like it. What do you guys want to see? You know, there's a lot of stuff. Big C, here's the baby, which I'll show this and then I'll entertain any other things you guys want to see. Okay, let me see. Erase all drawing. Big C is picture perfect. Told you guys to buy it all around here. 58, 59, 60. The stock went to almost 100. How long did it take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days, 2 trading weeks. Okay. It hasn't even completed the pattern, which is the neckline here at 110, which I believe it'll do on earnings. At earnings, the stock could be here. I'm not kidding you. Okay. So I heard a lot of moaning and groaning from my lovely members, some of them. Big C, man, it doesn't do anything for me. What's this? You know, I said, just stick to the chart here. We got a massive double bottom here. It's moving sideways. Stochastics, you know, oversold. It kept on climbing higher, even though on days it was down. So relax. Well, the ones who relaxed got a lot richer. And the ones who just moaned and groaned got a lot poorer because they saw the stock just rip higher every single day and they were not in it. End of story. Okay? It's a fact. So this one, again, from a standpoint of technicals, here's your massive neckline, which is 110. Options don't move like crazy. They move 40, 50, 60%. That's fine with me. That's what you want in a swing position. It is basically a W pattern, multiple W patterns actually, right there. Okay, and it's getting up towards this range here. It almost kissed this uptrend channel that, like I had put, and fell below that. So if you look at this move here when it started, and by the way, you never hear about Big C on CNBC or the big talking heads on Fast Money and all those great fund managers. You don't hear anybody except one guy came out. He analyzes all these great software companies, and I did put out that headline that it would be Big C is one of the biggest beneficiaries of this whole online migration. Okay, that was it. That's the only news you got. Price targets are still 80 bucks, 90 bucks. Because what are the analysts going to do? I said analyst, okay? Emphasis on anal. What are the analysts going to do? They're going to chase the stock, then raise. Once it's up here, they're going to be like, oh, raise it to 120. Where the heck were the guys when the stock was at 55, 60? Some of you moaning and groaning, which is fine, which is a normal human condition, okay? And but stick to the charts. So if you look at this big move here, it's a bull flag. Now, can it slip and slide a little bit lower and come down to show prices 75 bucks? Sure, sure. So the stock closed at what is it? Stock closed. I'm looking at my other screen. Where's my big C? Okay, 79. So can it be down $4 or $5? Sure. Do you look at that as a buying opportunity, or do you sit there and say, oh my God, it doesn't going to go up anymore? So stop being a price chasing thing and focus on the charts, your charts and mine, and you'll see the difference it makes in your portfolio. Look, in a rising bull market, there are a lot of geniuses. Everybody knows everything's going higher. When things get tricky, like they are right now, when it gets volatile, that's where we shine as Clueless A Trading. And you all know that very well. In a rising market, it takes a genius to buy a Bitcoin. Does it take a genius to buy a spec stock that's going higher? No, anybody can do it. You don't need somebody to tell you. Just go buy Microsoft. It keeps on going higher. But when volatility hits, that's when the tactical charts come into play. And these type of companies, which are not even talked about, are tomorrow's Amazon and tomorrow's Apple and tomorrow's Tesla and tomorrow's Netflix. I'm telling you right now about this company, just the way I mentioned to people on CMG 2.5 years ago at 600, and the freaking stock is going to 2,000. Seriously. Just the way I told you to buy GameStop, never knowing it was going to go past, the crazy numbers we're going through. These are where big money is made. Big money, okay? Exactly. Now, I could be dead wrong, but this company could be complete dud. I doubt it. Do your own due diligence, fundamental research, all right? So looking good, lots of upside, lots of upside. We like it. And that's pretty much it. So throw in, Airbnb. We have a 80% hit ratio on making money on Airbnb. I've back tested the trades. Every time I've asked people to buy it, 80% of the time we made money on it, and nice money. Okay, here was another stock. I was telling people to buy this stock all the way from down here. All the way from down here. Airbnb. And if you look at the daily chart, it doesn't have a long history because it just came public. So that's why it looks like a compressed chart. The stock hit a new high. Told you guys to buy the 210 calls, if you remember. Guess what? The stock went to 216. Now it's pulled back. This is a highly volatile stock. So that's why trading the hourly charts is far more beneficial. You can see that. It's good looking. Nice crossover from being oversold. Slow stochastics, very oversold. Now, they could be a victim of earnings. Their earnings are also going to come out. It's going to be the first quarter. The general thesis that I have on Airbnb, that regardless of COVID, okay, regardless of lockdowns, Airbnb's business went through the roof because people left their homes and said, I just want to be somewhere out of town. Lock me down, but lock me down in the Airbnb place, domestic or overseas. So why wouldn't their business go higher? Now it's a overvalued stock, but hey, all good things are expensive. So that's my thesis on Airbnb. I've never used Airbnb. Okay, I've gone through their site and stuff. It's amazing. So they're not involved with airlines. They're all about staycations, just in a different place, and vacations in a different place. So why wouldn't Airbnb's numbers be like explode? Because they seem to thrive during lockdowns, and they seem to thrive when openings happen, when reopenings happen, which so many reopenings are happening. Somebody give me somebody tell me like, no, that doesn't make sense. Of course it makes sense. So this stock, in my opinion, just looking at it from a technical basis, is a great trade. And I believe if you look at the channels here, the stock can go to $250. That's $70 from here. Does it happen in one day? No. I trade Airbnb in increments of $10, $15, because if you notice, here's the trading range: 177, 195, roughly $20 trading range. So even if it gets to the second channel or the mid channel, that's $220, ladies and gentlemen, that it was at just 2 days ago. End of story. All right. Anyone have a quick question? Because I want to wrap up.
I wanted to ask if we can review Etsy, if that's okay.
Yeah, absolutely. Why not? Why do you want to buy Etsy? Because Elon Musk said, hey, I like Etsy. He said SpaceX used Etsy. I'm thinking to myself, so? Elon is a character. He puts Bitcoin goes up 15%. The guy is something, But he's going to get in trouble soon with the SEC, because he's coming in a little too strong with his tweets and stuff. It's market manipulation, by the way, just so you know. A person that powerful mentions things and they go nuts like Etsy did the other day. Oh boy, you got to be careful. Oh, futures are up 10. So let's see what's happening. This is what's happening on the weekly, and then we look at Etsy. Look at the weekly futures. Little candle developing, very nice. And this is what the big fat candle did. I told you to go back in the Bollinger. Did I or not? Less than about an hour ago. Did I say it would go into the Bollinger? Yes, sir, I did. It went into the Bollinger. And now the MACD is starting to turn. About to. The lines need to turn. Okay? This is turning. It's all happening because we have a bunch of futures traders as members. Those guys don't normally like show up too much, but they use my charts a lot. Get a lot of DMs like, hey man, just killed it on those futures. So look at that, starting to turn. Does this look similar to this? What happened in late October? Do the stochastics look quite similar?
Yep.
Yes or no? Exactly. Exactly. They don't normally just cross over and start going. They have a little dip and then you get a little slide down. Everyone's freaking out like, oh my God, start doing the, monkey dance, like, oh my God, so scared. Monkeys looking for diapers. So basically what happens is no big deal. As long as the general directional bias is higher, stay long. As long as the general directional bias is higher on the internal, especially the stochastics, both slow and fast, you want to buy the dips. If they start to turn down again, get the hell out of Dodge. Exactly. And what's it doing on the daily? Exactly like what it's doing here. How similar is this pattern to this? This is like a mini Gartley pattern. I don't want to get into it right now. I'm not that good at Gartley, but I know how to draw them a little bit. Okay, it's like half a Gartley. So and look it up on Investopedia. So very nice. So the next level of contact, by the time you wake up in the morning, you're brushing your teeth, we should be at 37, 35. We could be up 30 points on the E-minis. So everything that I told you guys to buy and you guys bought on your own on Friday afternoon will deliver a nice little golden egg for you on Monday morning, which you should sell. And start your week with a big fat smile and get 20 other people to sign up at Clueless Trading, because nobody charts the market like we do. Nobody. I've seen a lot of charts. Exactly. And especially during panic crashes. Okay, Etsy. Does anyone have a dog named Etsy? It's a great name for a dog, isn't it? Etsy. Hey, guess what? E-mini's going over the 50-day moving average. Look at that. Look at that. Very nice. Very nice. That's, so futures traders right now just nailed how much? 36.57. That's 43. Wow. 43, 56 handles. And now it's pushing. Good job, Etsy. And who was that? Who wanted Etsy? What should who was that who asked the question?
Me, Leo, new
Oh,
member.
yeah, sure. And thanks for signing up, man. I love that. I like guys who make
Absolutely.
I like guys who make a decision just like that. Instead of like, oh, I'm free trialing. Oh, I had a bad day. Oh my God, my right ear itches. Oh, I don't know how to manage a position. Sign up as a gold member. Stay with us for a month or two. If you're happy, you stay. If you're not happy, sayonara. But you learn a lot.
My
That I can
exact
assure
plan.
you. Exactly. And Dominic is a perfect example of that. Okay. So I like people who make instant decisions. So okay, there we go. So here's Etsy. Great trading stock. I would not look at it on a longer term. I mean, this is the short-term trading stock. So it all depends on what your time frame is. You're looking to hold Etsy for 3 years, 2 months, a couple of days. If you're looking at it from a standpoint of trading it, upper end of the range is around that 225. This was the Musk pop. Boom, just like that. Bang, it went up, right? And then bang, it went down. So this is the lower end of the range, 185, mid-range, 210. You can trade this stock for 5, 6, 7, 8 points, and it still looks good. Best case scenario, 225. But they should have strong earnings, or maybe not, because Etsy flourished during massive COVID-19 lockdowns. So will they still continue their momentum? I don't know, but still looks good. Now, this is for traders. For people who are looking at Etsy on a longer term basis, let's take a quick look at it. I haven't traded Etsy for about 2 months now. Oh, nice. It hit all the tops. I like it when you do the lines and it's all hitting all these major major inflection points. So it gives you more. It gives you more technical certainty. Forget that. Okay, so again, if you look at it longer term basis, uptrend is very much intact. Stock is starting to get quite oversold right there, maybe a little bit more, both on the MACD and the STOs. Sell volume, it was a victim of this week's tech hit. It is right now bouncing off this blue line known as the 20-day moving average. Yeah, you could get, like I said, longer term basis, it's still looking towards that higher level. Now, if they totally beat numbers, then I'll have to draw another line and tell you what the stock can go. Let's say they have amazing earnings and good guidance and all that stuff, in which case the stock should go to 240. And I'm sure their earnings at, this was the acceleration channel. Beautiful. Yep, 240 to 260 on a massive blowout earnings. Otherwise, the stock's going to gravitate. It's got 10, 15 points in it. Everything else looks good. Okay, one more, 1 or 2 more, and I got to, it's 10:45. Not that it's late, it's just that oh no, we started at, we started at 9. Holy cow. All right, go ahead. You guys got to pay me now.
How about
all right.
NNDM?
Still going higher. This is your daily chart at NNDM. It hit the levels that I had shown you this chart, right, on my last webinar. NNDM hit its 200-week moving average, the white line here, kissed it, pulled back, uptrend intact. Now, this is a small cap stock, so it's going to have some small cap volatility, but what's the 50, Fib 50? 1972. It got to 1803, then the market took over a little bit, just in general market conditions, whatever. I think uptrend's intact. I would, if somebody isn't in it, they might want to see if it gravitates towards, well, this is the weekly chart. So let's look at the daily. So the daily chart is basically a real like cheap buying opportunity would be around 1148. This is where, you know, the sellers came in. The 50 is 1972. But when you look at the overall picture, and remember, it's a small cap stock, so it does have news risk. What if they say that, you know, the stuff didn't, you know, their product didn't really work out? I know no company will say that, but
Hey, so why would Kathy Wood be buying the heck out of them? I mean, she's just going nuts.
I know, because when did we first start trading NNDM? We started trading NNDM around like $7-8, if you remember. You know, that's how NNDM came to the picture. And you know why Kathy Wood's buying it? You probably heard one of my webinars on YouTube. It's a joke, all right?
I doubt it.
Listen,
I know.
if Kathy Wood, you know, she probably did. She probably thinks, hey, this guy's buying NNDM. No, she's a very smart lady, and she buys this pioneering company, and that's actually good info, man. Thanks. Who said that?
Rob. This is Rob.
Oh, okay. Yeah, Mr. Anderson. Yeah, that's awesome. If Kathy Wood's buying it, let's buy the crap out of it. I mean, the chart looks good. Kathy Wood is buying it. That's ARK, by the way. That's ARK. Everyone, you know.
Yeah.
ARK.
And she just came out today. Did you see her today? She had an interview,
No.
and so she said that she don't believe
that the market is not in a bubble. Yeah, I saw that.
Yeah.
I saw that.
Yeah.
Rob, I love it, man. I mean, these are the stocks that become tomorrow's $100 stock, right?
Right. Yes.
So, so yeah, I'm with you on this. So,
yeah, so I was waiting for a little confirmation on that pullback. I think the same, and I'm just gonna add some more there.
Sure, and it can slip and slide a little bit. You know, just normal market conditions. You can go between $11 and $12. No big deal, as long as it doesn't violate $11 on massive volume. This volume was primarily due to the market, okay? On thing. So as long as it doesn't violate 11 on like massive volume, then you know the strong hands are still in there.
Mm-hmm.
You know what I'm saying? So that's fantastic.
Sweet.
Thank you for that, man. Thank you, and we should thank Rob for that great information. Kathy Wood, you know, she better be looking at this video too. All right. Anything else? Anybody? Quick.
One quick comment, Frank. You don't have to pull up a chart on this, but I just thought everyone would like to know that Netflix has its best month of the year in February.
They better, because I've been watching some great freaking shows on Netflix. You know, my downtime is been, you know, it's not like, you know, because things are so many places are closed and all that stuff. My downtime is basically work, dogs, food, and Netflix. And I realized Amazon Prime is phenomenal. I just found this out over the last couple of months. You know, sitting around with the COVID thing, I never really watched Amazon Prime. They're phenomenal shows, but Amazon being Amazon, that's never really played up. You know what I'm saying? But check it out. It comes with, you know, it comes packaged with at least my service, which is Comcast, and it's amazing. And Netflix, forget about it. But Amazon Prime, I was shocked, pleasantly shocked to the caliber of the shows. You know, it's fantastic. Okay, so Netflix, if you look at it on a weekly basis, is just a core. It's just ready to go. If you look at it from a weekly standpoint, okay. And I don't think I need any more lines here. Okay, there you go. So here's the range Netflix is really trading in since July. Upper end of the range is I'm not even taking the 593. That's an overshoot. I'm taking this. Okay. 576 max drawdown on a major crash. On the left, 463. So that's roughly 100, and it's 110 points, right? 113 points. So add So and this candle, this weekly candle is still positive. It's beautifully bounced over it beautifully this is actually an uptrend line. Why do I have it in red? Sorry, because I normally don't use Thinkorswim for my Netflix trades. I use Quad. Okay, there we go. So beautiful body of this candle still within this. That is an inside week, despite the tech massacre. It's an inside week, right? Very nice. Body of this candle very much intact. If this gives up, it's a different story. We're dropping to 465 like real fast, 50 week moving average, whatever the case. But it's still intact, still kind of a hammer. We obviously want this green, in which case, see you later. So what's the depth of this candle? 113 points. Add 113 to 576. That's 700, correct? 113, yes. That's 700. Let's see if we can technically justify a 700 price point. Because that's a range breakout. You add it to the upper end of the range, that's eventually where it settles. Just so you know, that's how it goes. It's an old-fashioned way of doing things, but it does work, as you all know. Okay, okay. Let's see if we can justify a $700 price target on a swing basis on this baby. 1, 2. Let's change the color a little bit, make it green. Perfect. Yeah, we can justify technically a 687 points. That's pretty much as good as 700. Yeah. See, I wanted to see if the technical justification based on that range breakout, when and if it happens, which I believe it will. And Paul just gave us another piece of great information that it can happen. You said February was one of the best months. Is that what you said?
February and April are the best, and March is the 4th best. So we got 3 strong months.
No kidding. There you go. So basically, if I draw these lines here, this macro channel that started on the top end in July, all it's been doing is cruising along the channel. And of course, Netflix can drop 15, 20 points on a bad tech day in the market. That's standard procedure. But if you keep an eye on the big picture, the stock eventually wants to go to $700. Of course, along the way, it wants to kiss 616. That's this line here. That can be looked on as a, let me change the color a little bit. Let me make it dotted so we can, it can be looked on as a rising wedge. It's good. We're covering all the sexy stocks. Let me see here.
The more you talk, the more the Dow goes up. Frank, keep talking.
I'm telling you, man, what can I say? Look at that shit. That's nice. Dow and E-minis now up 11. Techs are flying, 19. Very nice, very nice. And listen, that's the sign of, like, some of the crap that I deliver or do, that it actually works. Because look, we started out when the markets were, way lower, not way lower, halfway up, but we walk people through it. And the last shot that we'll see before we close out this webinar is what we were talking about a little less than 2 hours ago, and where we'll go, and it's there. So here, so basically, there. So this is a rising wedge. If we entered the rising wedge, the dotted lines, then we are looking at 615 on the stock. So if somebody's really bullish on it, go out a couple of months, go out into March, end of the first quarter, and buy some calls all the way up in the 600s. And they're not going to be that expensive. Trust me. But if you wait around, as the stock moves higher, approaches the upper end of the range, they keep on pushing the premiums higher. All of a sudden, they're like so expensive. They're like, what? Why didn't I buy it like before? So you'll still make money, but you'll be able to afford less because the premiums are going to be stuffed as they move higher. That's how the algos work. All right, so now we got Netflix out there. This is 580. I think the stock hits that very soon. And best case scenario, 614 and 700 at some point, you know, maybe the next earnings or whatever. Okay, so where are we here? This is the pattern symmetry that I showed you all from from the beginning of the year, 2021, right there, 2021, January 4th, same pattern symmetry coming into play, zigzag its way higher. First level of full contact will be at this level here, which was the previous high on January 4th, pre-market, and that would be, these are all predetermined fixed numbers, okay? That's what I explained earlier on. 3776, expect some volatility here too, which was the previous support right there, 3740. However, at that level, you would have entered there. You would have entered into the into this nice triangle. Here's a downtrend line. This is actually should be in red. So obviously you're going to find some selling on the downtrend line, but get used to this chart. Here's the best part. Look at the MACD. I haven't even changed the colors yet. It's gone green. This is actually green. Look at that. Gone over 0. Now, here's the 1 hour getting up there. If you wake up in the morning, futures up 20-30 and it's overbought, rest assured you will get a sell program at least after the first 15-20 minutes of the market open. And then you know, then we see what happens. All right. Good night, everyone. Let's have a great week. For new traders, let me remind you one thing. Do not expect to make money every single day, even though I'd like to make money every single minute. There'll be days that you'll be down. Those are days that you buy, such as Friday. Okay? But then the rewards of that will come within 24 to 48 hours, depending on the technical charts. As long as your weekly P&L is higher than what you started with, that's what you should be looking at. If you want to be a monkey on a hot tin roof, day trade like crazy, well, you got to be fast. You got to trade those ranges. And you're going to be at the mercy of the volatility programs that attack us every single day in the market. So if you want to be a very active day trader, all fine and good, but don't expect to make the big money without having a couple of swing trades in your book. God bless you all. God bless America. Let's have some good things going and get some sleep. Good night. And let's get a lot more referrals like good friend Leo here in there. We need new blood. Good blood. Right? Exactly. Take care. Watch Netflix.
Hi, Dave.
See ya.